just give us your views of market performance today. As Mashudu says, the market still in the red, investors sitting on the fence, not much momentum here.
Yeah, that's what we're seeing. The markets have been in bear territory. We're going into the second week now of bear territory. And because we've started the second half of the year, we've now seen the first half reports and compared it with the previous year, 2010, and there's a lot of difference. Markets did about 20% in 2010. This year, it's a completely different story. So it looks like the fixed income market is where the attraction is, and certainly not in the equities.
I'm fascinated by that statement, Kubi, because a report out comparing first half 2011 to first half 2010 suggests that there's been a decline in investments in fixed income by as much as 56% and 15% in equities. Now, you'd think that all the reforms and the consolidation really needs to have taken its course, and people should be a lot more confident in the market in 2011 versus what it was in 2010, but not so.
Well, maybe that's because we're adding the full half year together. Remember that the period before the elections, there was a slowdown, there was a general lull. Nobody was in a hurry to bring in money before the elections, before it became clear that there was going to be continuity in government, there wouldn't be any uprisings in any part of the country. Now that that's behind us, there's been an increase in flows. So if you compare, I'm sure by the time we look at the end of third quarter 2011 and compare with third quarter 2010, there'll be a marked difference. Another thing that has changed, the treasury bills, there's interest in both the bonds, which are medium to long term, and the treasury bills, which are short term. And given the de-restrictions, I think you mentioned it earlier, there have been some de-restrictions on the length of time that investors can keep their money within the country. And we're even seeing interest at the very short end, which is 90 days, and just 3 months to do a turnaround.
I mean, talking about those trends, bond yields in general across the various tenures, somewhere in the region of 12.8%. Is that attractive enough to really give momentum?
I think it is. I mean, if you look at the developed world, you look at the risks you have in the West, you look at where interest rates are, they're in single digit, they're in the very low single digits, never mind. And then you compare that with an economy where you can get about 8% in 3 months, you're talking about 9% in 6 months. And then you're looking at a currency that is stable to revaluing. So there's a double gain. You gain on the currency side, you gain on the interest rate. I think 12.8% for the longer tenors, which is maybe a year and 9 months to 3 years to maturity. That looks like a very good investment.
Just talk to us about liquidity flows and the rates on the interbank market. That's always been a concern.
Well, the rates of the interbank markets have softened just a little bit this week. They were pretty high. They were almost at year highs last week. We were seeing a trend 11.5 to 13%, but there's been a moderation. There's been some kind of moderation in the past couple of days. So we're back maybe to the high single digits, depending on the counterparties. 9% to 11%. There's been a bit of moderation there.
And finally, Kubi, just your comments. We're hearing that obviously September is the deadline for the recapitalization of those rescued banks. And already there are murmurings where investors don't come through, nationalization is the best option. If that's the case, how much pressure is that going to put on AMCON?
Well, we don't know yet. This is something we just heard. This news broke this week. So we will probably be hearing from AMCON over the next few days. But I would think because AMCON has a lot of work to do in terms of recoveries, they have bad loans to chase down, they have a mandate for 10 years. So their mandate would probably not conflict with the nationalization of the banks. And the nationalization has kind of calmed nerves. Nerves were getting a bit frayed because September is very close now. We're already in that quarter. And I think that statement will have a calming effect generally on investors. It has and builds confidence in the economy as well.